All right, good morning, everybody. Alensky, that looks very familiar. You want to compare notes? How are you guys doing today? Hope everybody is doing wonderful. I'm telling you, you're a good student, brother. Nice job. Hey, Chris, nice to see you back in here. Guys, welcome to the education room. Hey, Cav, nice to see you back. Guys, we're going to rock it out very much like a hurricane today. Gonna be a good time. I'll tell you what. Let's talk about patterns. Alinsky, taking yesterday's lessons and just killing it. Nice job. I'm telling you guys, this is what we do every day, right? Ask a question, get an answer, grow. Ask a question, get an answer, grow. That's going to be the plan. Systems and routines are very much what we do each and every day. Um, And part of my routine is making sure that I don't trade into news, making sure that I'm not going to put myself in front of a freight train of emotion. I'm not sure what FOMC did yesterday. Was it crazy, guys? I was doing stuff. That's all right. Losses happen. I had losses today too. I'm actually a little bit behind today. So it happens sometimes. It does. Sometimes you take great trades that don't work. Um, and guys, it's just a part of trading. People ask, "Hey, Mark, do you lose?" Yeah, I lose. I think as I go into my afternoon trading, guys, I've got about $200 or $300 to make up to get back to break even. But I didn't break my rules. They just didn't work. And man, that happens sometimes. I don't want you to worry about that, but I do want you to be able to go in and look that it's Thursday, November 2nd. We had that unemployment claims, and there's really nothing else going on for the rest of the day that we're worried about. But I check that news each and every morning to make sure that I'm not missing out on what could make the market react a little crazy. Um, and then, guys, everything that I talk about is coming from the tutorial page, straight off the Nexgen website. And today's lessons, believe it or not, guys, Chris is going to be like, oh man, this again? Every day, my friend, every day. We're going to talk about the high probability trend trade first. We're going to talk about a trade that's just going to build a foundation for you, that's going to make you a chart reader, that's going to give you confidence in the software. And this is a trade where every indicator lines up on the chart. This is a trade where everything agrees and you have the strongest triggers and there's nothing in the way. And guys, I'm not going to lie, this is the easy one. This is the one that should make you feel comfortable and confident going into the trade. This is the one that teaches you to read your indicators, and that's the goal. The goal is to become a chart reader. And let me tell you why. Because 90% of your day, um, right on. I always tell people you should be able to teach whatever you're going to do, Chris. Whether it's the high probability trend trade, whether it's any trade, whatever trade makes its way into your plan, I should be able to hand you the microphone and you should be able to teach it. And if you're not comfortable enough to teach your own plan, well, then you still need to work on your plan. And that's such a true story. And that's one of the reasons why I'm so comfortable teaching this class, because this class is my plan, guys. This is exactly what I do. This is a foundational approach to the software. This is your beginning steps. This is you're teaching yourself to read the indicators, because 90% of what you do is reading indicators, and only 10% of what you do is actually trading. Um, and that's huge because it means that you are committed to a statistical advantage. You are committed to the best of the best. And guys, honestly, this is your money. This is your livelihood. You should be. You should be putting yourself in a position where every time you take a trade, you've got the highest chance of success. And that's what the high probability trend trade does for you. It teaches you to recognize where the market is likely to continue, and then those continuation points become entries for your best trade. You're going to understand where the market is likely to go. It's going to help you choose your profit targets, and you're going to understand where the market is likely to stop. And we talked about these a lot yesterday. Areas where the market is likely to stop. We call these termination conditions, and I want you guys to see this. Um, Lines on your chart that create a reversal Guys, this is where your best chance of success comes from. After these lines, after these areas where the market is likely to stop. And we're going to use these over and over. And your advantage is going to come in between the lines right here with strong triggers with a clear path. And it happens every day. This is crude oil. We're going to come back and look at it for sure. But that's going to be your trade right there is going to be the one that you get into because you're going to understand where the market is likely to continue and you're going to understand where the market is likely to go. And you're going to do that with a high probability trend trade. Can every guys give me a Y if you can hear me, please? I want to make sure. Okay, yep. It is just Debbie. There we go. Yeah, guys, if you ever can't hear, let me know. And then when you see a flock of Ys right after you posting it, then you know that it's on your end and not everybody else's. But don't ever hesitate. If you don't hear me, just go, hey, sound check. Sometimes I'm on break. But guys, we're going to focus on the best of the best. We're going to lay this foundation. And I'm going to tell you guys right now, my brother is teaching the room tomorrow, and I'm so excited for y'all to be a part of his class tomorrow. But it's going to be important to really latch on to what he's teaching, to really be able to embrace it and get and value the lessons. You're going to need that foundation. You're going to need to understand some of the basic concepts that he's talking about. And you're going to be able to do that through the high probability trend trade. And this is the trade that has only three rules, guys. We're going to look at momentum, we're going to look at a clear path, and we're going to get an entry area. Each rule provides the advantage. The advantages come together to create a high probability trend trade. So we're going to study the looks because the advantage of momentum, while we use it for the high probability trend trade, guys, momentum is momentum. And embracing the idea that strong triggers move things is going to put you in a great position. The clear path works regardless of what kind of trade you're taking, but we're going to embrace it and learn it from the high probability trend trade and then just defining entry areas, guys. And we're going to do all of this work on only two charts because that's all you need in the beginning. Don't overthink it. But once you can read two charts and read two charts well, you're going to open doors for yourself if you want to add other time frames, if you want to add a range chart, a market flow chart, stuff like that. But it's going to be your ability to read the indicators that's going to open that door for you. And with the two charts, the large chart leads the way. The large chart is where we start. The large chart will provide the first two advantages because the large chart defines direction, momentum, and areas. Um, the large chart is going to give you all this great information. It's going to give you rule number one, which is strong trigger lines, and strong trigger lines give you that advantage of momentum. Rule number two will be met on that large chart, making sure that you're not trading into these areas where decisions are made, these key Fibonacci areas that can create a bounce that can reverse the market. And when you have those two advantages, when rules one and two are met on the large chart, you'll be able to turn your attention to the smaller, faster chart. And that smaller, faster chart is just a refinement chart. It takes that broad stroke of a brush and it refines it down into an entry point. And it uses rule number three to talk about where the market is most likely to continue. You're going to be able to pinpoint it. You're going to be able to enter. And honestly, guys, your great entry is going to create manageable trades. I can't stress that enough. So let's focus on the best of the best, guys. Let's use two charts. Cav, do me a favor, man. Write some rules on your charts. Tell me what you see, because first glance we could have an awesome talk, but I want to see what you see before I talk about why you got stopped out of that trade. Um, if you don't mind. I'm telling you, it's going to help both of us a lot. I can read your charts great, but I want to make sure that you're seeing what I see because it's going to keep you from holding too long and getting stopped out, probably in that case. Um, awesome. So let's go to our charts and let's take a look and let's figure out exactly what it is that we're looking for. And let's start with rule number one. Good morning, Dwight. Rule number one tells me that I have to have strong trigger lines. And rule number one really depends on the trend of the market. If the market is going up, your background will be green. Guys, this is your first easy lesson. If the background is red, you're in a downtrend, green is an uptrend, you should only be looking for rules to be met in the direction of the trend. because the only way that you can have strong trigger lines is if you're trading with the trend. In strong trigger lines, rule number one, look exactly like this. Your small triggers, those solid lines, two lines make one trigger, and your large triggers, the dash lines. Again, two lines make one trigger. When your small break above the large and they create space between the two, there's a gap between the small and the large, this is your strong trigger look. And your strong trigger look means that the odds are favorable for the market to continue in the direction of the trend. And I'm a big fan of language, and I think that when you say something like odds favorable, it breeds a little confidence, right? Odds favorable momentum is going to be your best of the best look. Odds favorable momentum should lead the way on every trade that you're looking as a brand new user, because when you have odds favorable momentum, this is when it's most advantageous, most favorable to buy a pullback to Fibonacci support on that smaller, faster chart. And on your large chart, it's going to register as a bar with a tail or a wick. And we don't trade wicks, guys. We don't trade entries on the large chart. That's what the small chart's for. But these tails are going to help you go back and study to learn trust in the methodology. Um, but these tails are just pullbacks on a smaller, faster chart. And we're going to show you how to refine it so that you guys can pinpoint exactly where the bottom of that tail is most likely to happen. And this becomes your entry with all that momentum to carry you off to your profit targets. Same thing in a downtrend. It's a space between the small and the large, like scissors open, ready to cut. Guys, that's what gives you the advantage of momentum, and that's when it's most favorable to sell a pullback to Fibonacci resistance on a smaller, faster chart. And once again, it looks like these tails when you have that odds favorable momentum. So I'm going to show you real quick odds favorable momentum, and I'm also going to show you those tails, guys. This is it right here. This is where you guys are going to learn how to enter the market. You're going to be able to see this odds favorable momentum, and you're going to be able to make decisions that have you pinpointing exactly where that market is likely to continue. And this becomes your entry, both of these actually, to continue with the momentum to get to the next key Fibonacci area. Pretty cool, right? Nothing like crude oil putting on an example for us. So strong triggers lead the way, and if we have strong triggers, well, then there's got to be a look for weak triggers, right? When your small triggers work their way inside of the large triggers, guys, this is a weakening. This is literally anything can happen. This is the look that precedes reversals, deeper pushes, and retracements. This look does not give the advantage of momentum. The scissors have closed. You can no longer cut. So rule number one says commit to that best of the best look. Commit to that advantage of momentum. And remember, 90% of your day is spent reading indicators, 10% is trading. So odds favorable pushes this market down. Weak triggers precedes a reversal. Odds favorable, there's a tail, pushes it up. Weak triggers, another reversal. Odds favorable, there's a tail. Market continues down. Over and over throughout the day. It's what you do in those in-between stages that are going to keep you safe. And you'll notice that in this box here, the larger down, the smaller up. Or the trend is up and the triggers are down. Guys, this disagreement is a transition phase. This is where buyers and sellers are really fighting one another. They're trying to figure out who's going to win. Half the world wants the market to go up and half the world wants the market to go down. And those halves are pretty even. And you see that fight through the trigger lines, through the lack of odds favorable momentum. This is where new users tend to try to predict what the market is going to do. They try to be first. They're like, oh, it's green, I'm going to go long. And sure enough, they get stopped out. And they're like, uh-oh, well, I guess now it's red triggers. I should go short. And they get stopped out. And guys, this is where accounts dwindle fast. But if you sit on your hands and you say, man, these yahoos don't know what they're going to do, I'm going to wait till somebody takes the lead. I'm going to wait till somebody wins that fight, and then I'm going to trade with the momentum that they provide me. Guys, that is your best chance of success. So odds favorable momentum, small separating from the large, waiting for the advantage. Is everybody cool with that, especially my new people? I want to make sure that you're comfortable with the concept, and I'm going to show you. I'm going to open up crude oil real quick, and we're just going to have a little fun with momentum. I'm going to put nothing but the trigger lines on there, and let's see if we can see any consistency. Weak triggers, the market pushes up. Strong triggers, the market pushes down. Weak triggers, the market's pushing up. Strong triggers, the market pushes down. There's strong triggers and it pushes. My guess is there was Fibonacci something right there. Look at the indecision. Is it going up or down? Hell, I don't know. But strong triggers push it up. Tail, tail, tail. Weak triggers push it down. Tail. Is anybody a believer yet this soon in the education? Strong triggers push that market in the direction of the trend, guys. Doesn't it make sense that if you're trying to take advantage and make money in a market, that you're taking it from the absolute highest probability scenario? I hope it makes sense to you, because if it doesn't, I don't know how to fix that. But I'll find a way. So I'm going to put my areas back on here, because when we have momentum, that's rule number one. We're going to start to look for a clear path. We're going to make sure that we have room to our profit targets. We're going to make sure that there's nothing in the way. Guys, these Fibonacci areas can stop the market. They can make a bounce that's untradeable. They can also create that indecision, create that fight between buyers and sellers that has the market appearing as though it's consolidated. The lines that we're looking for are red Fibonacci resistance, blue Fibonacci support. We're looking for yellow 1-to-1s, divergence high lines, divergence low lines. Guys, all of these areas may stop the market and reverse it in its tracks. Sometimes we even see it happen to the tick, right? But areas break, and they typically break with momentum. And then sometimes there's just indecision. So we need to be able to gauge, is the area, does it have the potential to break? Is it likely to hold? Is it likely to reverse? And we're going to do that by just kind of gauging. And here's a beautiful example. When price dynamic Renko bars reach this Fibonacci support, these red bars come down. Notice that they hit support. Guys, all you have to do is ask yourself, where are my trigger lines? If your trigger lines have not broken through, and I don't mean eked their heads through, I mean literally small and large gotten to the other side of that area of support, well, this is an area that may create a bounce. This is an area that may reverse the market, and I'll be darned, it sure did. Look at that. Perfect. Right to the Fibonacci support, none of the triggers break. There's your reversal, and it's giving you odds favorable momentum. You gotta love that. This is what we look for. If an area is reached and the triggers don't break, sit on your hands and do nothing. If both the small and the large triggers get through the area, for example, an area of support, it begins to behave as resistance. Guys, we can look for opportunities to take that market down. Even if price pulls back to an area of resistance, all the triggers remain below, sure enough, it holds, and the market continues down. Guys, termination conditions are designed to not only keep you from taking trades that are losing their advantage, it also is going to act as an anchor for the highest probability trend trade that you can take. When you have odds favorable momentum after a termination condition, when it has that clear path, guys, that's the absolute best of the best. But you've got to get through that simple recipe to determine, whoops, I don't even have a printer, whether or not the area is likely to hold or likely to break. And the recipe stays consistent, guys. No matter what you wish, hope, or want, it's always the same. If price reaches an area, sit on your hands and wait for the reaction. You don't know what it's going to be. No matter how much you think you do, you have no idea whether it's going to bounce, whether it's going to dance, whether it's going to break. So price reaches resistance, none of the triggers have gotten through, it's not a clear path. Sit on your hands, rule number 2 is not met. If both the small and the large get to the other side of resistance, well, now resistance is broken. It behaves as support. There's one of those tails with odds favorable momentum. If you keep it this simple as a brand new user, guys, you're never going to get caught trading into one of these areas that's likely to create a bounce. But areas break all the time. And they break typically with odds favorable momentum. When the market is moving its absolute strongest, guys, I'm telling you, if momentum is the one thing that you use as a crutch, it's a outstanding crutch. No triggers, no trade. Both triggers giddy up. Guys, sometimes the small triggers smash through an area with odds favorable momentum, such a key part of it. But the large triggers don't break yet. And this is an area with the potential to break. When the smalls come through, and I mean smash through, not just peek their head over the top of it, but literally like boom, sonic boom through a fib, getting way above them. Large triggers are dragging, but that momentum is its absolute best. This area has the potential to break, but it's not broken, which means that you don't have a clear path, which means that your chart reading just told you that one of the three advantages is gone. It can't be a high probability trend trade. It can't be the best of the best, but it can be an outstanding opportunity for a trade if you have that advantageous momentum and your entry area is solid. And we're going to talk about solid entry areas. So this is going to be your second trade, guys. The high probability trend trade is going to build the foundation. This areas with the potential to break is going to be that second layer. It's going to be your first medium probability trade. And then from there, guys, you're just going to keep growing. And it's going to be pretty outstanding where you end up. You're going to be amazed at what you did. But remember the recipe. So these are the ones at highs. Your first slide is a divergence high, guys. This means there was a loss of momentum in the market. This isn't a termination condition because price didn't reach this area. Price created this area. It's when price comes back and reaches that divergence high, the triggers remain below. Now it's a termination. And if it creates a full reversal in the market, we're going to call it a strong top. And a strong top is the precursor for the highest probability trend trade that you can take. Price reaches resistance, the trigger lines remain below. That's a termination. Price reaches yellow 1-to-1s and resistance. Triggers remain below. That's a termination. And if it happens at highs, it's got to happen at lows, right? Price reaches these yellow 1-to-1s. And I want you to see the indecision in the market because it hits twice. It hits the 1-to-1s and it fluctuates as buyers and sellers fight it out, and it retests the area. This time it retests the area with weaker triggers, and sure enough, it reverses the market. If a termination at a low reverses the market, we're going to call it a strong bottom. And a strong bottom is the precursor for the highest probability trend trade you can take. Check it out. Odds favorable in a clear path. There's those tails to get us up to the next key Fibonacci area. Price reaches support. Triggers remain above. No more short trades. Hey, what's up, Michael? There's one of those divergence low pivots, not a termination because price creates it. Price didn't reach it. Price reaches the divergence low. Now it's a termination condition, pivot stop out, and if it reverses the market, we're going to call it a strong bottom. So there's pictures, terminations at lows, terminations at highs, and sure enough, guys, look at what it does, and look at the momentum, and it takes it right up to the next one. Good morning, Sydney. Nice to see you in here. So termination conditions happen all the time, guys. 90% of your day is spent reading indicators. 90% of your day is reminding yourself that the advantage isn't always present. From resistance with no triggers to support with no triggers to resistance with no triggers. Nothing to do here, guys. You never get odds favorable. You don't have a clear path, but look at this. When this termination, this pivot stop out, creates the reversal and gives you odds favorable, and the market didn't reach that next key area yet, guys, there's one of those tails. This is your highest probability trend trade. This is the one that's going to get you paid, and your ability to ignore all the nonsense before the advantages are present is what's going to make this money do the most work in your account. And this is where I get to take a picture of a picture for you guys, because I think this is probably one of the best pictures John has ever put into the materials. Odds favorable momentum, and this market is screaming to the downside. Let's get some arrows that we can actually see. It runs right into yellow one-to-ones, and none of the triggers break, guys. You've been watching the market push. The momentum is outstanding, and you're feeling as though you're getting left out, but it reaches those yellow one-to-ones, and not one person in this room has to lose that short because rule number 2 keeps you safe. Look at the indecision. Sellers are in control. They reach a spot. This is where sellers are taking profits. This is where buyers are entering the market. And the market bounces, takes everybody out of their short position. Well, all the triggers are below resistance, and sure enough, it pushes back again. And then the fight is on, and the buyers, and the sellers, and the buyers, and the sellers. And this is your 90%, guys. This is where you guys never had a rule met. This is where not one of you gave away your money to a market that couldn't decide, but the buyers ultimately win. Here they steal the momentum, creating divergence. They push all of the trigger lines above resistance. It begins to act as support. The small triggers are outside of the large. And look at that tail, guys. This is you. This is you entering the market on a pullback on that smaller, faster chart and riding that thing all the way up to Fibonacci resistance. This is your 10%. This is what is the reward for the patience, guys. Stay out of the maybe. Stay out of the nonsense. Give yourself the best of the best advantage and use momentum and Fibonacci to get you where you want to be. Termination conditions will save your bacon over and over. Whoops, that's not what I meant to put in there. I wanted to give you guys the whole picture. But if you really like 10%, there's a picture of it for you there. And then, guys, there's one more termination that I want to talk about. Sometimes you have a clear path and everything says down and the market goes up. And sometimes you have odds favorable in a clear path and the market goes down. I'm going to give you one more termination condition, but this one's going to happen on a smaller, faster chart. This one you're going to be able to recognize on that refinement chart. You're going to be able to take that broad stroke of a brush where you really can't see change happening that fast. And you're going to look at your smaller chart. And if your smaller chart has 3 divergences, remember the cyan line that lets you know that there's a loss of momentum? 3 divergences in the same place may terminate a trend. Whether it's a low or a high, cyan lines from a low, divergence lines from a high. If you see 3 of them, guys, it might push. Becomes stronger when your trigger lines go from odds favorable to anything can happen. Remember I said momentum is momentum, guys, whether it's a large chart or a small chart. That space between the small and the large lets you know that there's an awful lot of giddy up behind the move. Small triggers inside lets you know that it's going away, so you couple that with 3 divergences, it becomes even stronger. And then when that third pivot, price can't even match the previous pivot and you lose momentum, it actually creates one of those head and shoulders patterns that some of you guys are familiar with. It adds even more fuel to the fire to push it up. So you're going to see this look at a low or this look at a high when your large chart can't give you that information fast enough. It's going to help keep you out of that short or that long. And even better, as you learn to read your indicators, perhaps you take the perfect short in 3 divergences print. It lets you know that it's time to get out of that trade. Or you take the perfect long in 3 divergences print. It's going to give you a chance to take quick profits, to get to a break-even level, to make sure that you're not giving it back when the market is changing. So, guys, that's termination conditions. That's rule number 2. And that's giving you a clear path. Is everybody okay with that simple recipe? Price reaches the area. When it reaches the area, if the trigger lines remain above support, below resistance, sit on your hands. You just don't know whether it's going to break or hold. And there's no reason to guess, right? Weak triggers, large triggers still aren't through the area. Look at this. Your small chart is giving you a couple divergence. You're losing momentum everywhere. No reason to take that long. The advantages are gone, guys. So we have a clear path. We have odds favorable momentum. Everybody's solid with this, right? Feeling great. Michael, are you good? Chris, you feeling okay? Who else is new in here, guys? I always get names. I just want to make sure that you don't get left behind. And if something's going on and you feel like you need some clarity, let me know. I will back it up for you just a little bit. Much more, Michael. It takes a day or two, but it starts to click, doesn't it? Guys, when you have odds favorable, when you have a clear path, here's the cool thing. We're going to refine it on that smaller, faster chart. So much so that we're going to be able to use a limit order to buy or sell an area inside of favorable large triggers. We're going to pinpoint where those tails are likely to happen, and we're going to do it with that smaller chart. And let me show you why we use the two. The large chart is the large crowd. It's the people that move the market. It's the guys that are making it go up, that make it go down. These are the guys that establish trend and momentum. These are the guys that react to those areas. Well, if you've ever, I don't know, lived more than 30 seconds, you know that there's always a Yahoo that likes to buck the system, that likes to fight, to go against the flow. Guys, this is your salmon spawning. Everything says up, and the small crowd is going to force a pullback. They're going to give you a tiny retracement. They're going to try and make it go down, but really the large crowd wins more often than they don't. This is how you guys take advantage of everything that the large chart produces. You're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And it's a lot of words, but it's really not too difficult. Let's define favorable large triggers first. When your small triggers are cranking up, right? Everything's going. Your large triggers down here should be wide and angled in the direction of the trend. Your synthetic triggers on your small chart should be wide and angled in the direction of the trend. And they should be overlapping one over the other, because what happens is when they overlap, we call that the favorable large triggers. It's two sets of triggers, large and synthetic, behaving practically as one. And we're going to look for the areas nestled within, which means that the tighter they are on top of one another, the smaller your window of opportunity, the area where the market is likely to continue. And the smaller the window of opportunity, the least amount of risk that you can have on a trade. And I'm not going to lie, feels good to risk very little. So what we're going to do is we're going to identify on the large chart that we have odds favorable momentum. The large chart says that we have nothing in the way. The small chart is going to look like this. Large is synthetic, screaming to the upside, small's above the large. Everything is green, everything is going up, and this is where we make the decision that it's time to look for an entry. So I want you to focus your attention on the favorable large triggers, on the synthetic and the large working together, coming up like a shark about to breach. And what areas are falling within it? And guys, the areas where high probability trend trades originate are going to be fibs, support for longs, resistance for shorts, mid bands, and then those yellow one-to-ones. These are the lines that create a bounce, guys. These are like a brick wall you're throwing a tennis ball up against, or a cricket ball if you're into that, or whatever, basketball. I don't care what your sport is. It could be a soccer ball. But these create a bounce point. It's like a ricochet point. And what we need is that market to come back to one of these areas inside of favorable large triggers. And that comeback, that retracement, that fight against everything that's going on starts with a reversal bar. This reversal bar says that the small crowd is ready to put their dukes up. They're ready to give it a go against the large chart. And at the time of the reversal bar, all I need you to do is identify your highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. And inside of favorable large triggers is a very key part of that phrase, because these are moving averages and price loves to correct to moving averages. If we have a bounce point, we're going to put a limit order right above the highest point because of the momentum on the large chart. Because of the clear path on the large chart, we're not anticipating a super deep push. We don't expect that small crowd to be able to really tear up all the progress of the large crowd. So, limit order right at the top, and then we're going to wait. And it's either going to come back to us or it's not. We're not in control of that, right? We're not in control of whether or not we get filled, but what we are in control of is on our large chart, we had odds favorable momentum. On our large chart, we had a clear path. So the small chart finds our entry. And guys, on this small chart, I wait for the reversal bar. I don't jump in up here because that's fear-based, right? The market loves to pull back. Once the pullback starts, I'm going to draw a box, and this helps me a lot. From the highest point of the triggers to the lowest point of the triggers, this is where I'm looking for areas. This is not my window of opportunity. My window of opportunity for a long trade extends from the highest point of support to the lowest point of support inside of those favorable large triggers. Are you guys with me on this? This becomes the point where the market is most likely to bounce. So as it pushes back, you've got a limit order waiting right here. And you're saying, if price hits my limit order, then I'm going to be in this trade. And I'm going to be in this trade with the advantage of momentum, a clear path in an area where it's most likely to continue. And then let's talk about some of the realities of trading. Sometimes the small crowd, they get a little ornery, as we say here in Texas, and they might push it. They might push it to the bottom of that window. And if they do, that's cool, guys. You're still in the window of opportunity. You still have all the advantages in place. But sometimes that small crowd has more giddy up than we anticipated. Sometimes the small crowd is going to push it beyond that window of opportunity, and they're going to push that market outside of that window. And if they do, we're going to wait with a protective stop, guys. We're going to get stopped out of that trade. We're going to take a loser. And anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's okay. It's a cost of doing business. It's a totally normal part of a positive equity curve. But you are so good at defining where the market is likely to continue that you know exactly where it shouldn't go, and you're going to manage your risk by having a protective stop there. But my goal for you, my hope for you, my wish for you is that you study these entries and get in at the right spot with the advantages. Take 20 days to get good at it. Because when you do, 70 to 80% of the time, when the rules are met, this is your outcome. And when you win something 70 to 80% of the time, guys, it creates confidence through the memory of success. And you're going to be able to go back and you're going to be able to study these and determine whether or not the advantages are there. So, Chris, you said it looks like crude oil small chart right now. You want to go through the rules 100% together? I love this. Thank you for saying that. You're going to love this, Chris. First and foremost, what direction is crude oil trending? Is everybody comfortable that the trend is up, the background is green, we should only be looking for rules to be met for high probability trend trades long? That's pretty easy, right? Let's keep ourselves safe and go with the trend. So next, we have to identify, what do our trigger lines look like? I'm going to give you guys a hint. This is my odds favorable look. I'm going to put OFM. What a great way to annotate it, right? And if that's odds favorable, Chris, do you remember? This one is anything can happen. We don't have the advantage of momentum anymore. What we have is small triggers inside of the large. I don't have a market that is likely to continue in the direction of the trend. So because of that, rule number one isn't met. Are you guys comfortable with that? But let's say I know that the momentum isn't the best, but I haven't reached the termination condition yet, which means that I do have a clear path. So let's go through and let's annotate. Rule one not met, but rule two is. So if I have an entry area, I can choose to take a medium probability trade. And what does that mean? That means that an issue exists. And that issue in this case is that I don't have the best of the best momentum. So I'm looking at my advantages. Without momentum, if I have a clear path and I have the best entry area, I can take this trade and manage it. So in order to have that second advantage, I need a pullback to an area inside of favorable large triggers. Not Tiggers. Triggers. So Chris, here's my reversal bar, right? And then this is the top of my trigger lines to the bottom of my trigger lines. And what I want you to notice. Oh, Debbie, I'm sorry. I'm going to type off to Debbie real quick. I'm not sure if this does anything with it, but... Oh. All right. So we don't have the advantage of momentum. We do have the advantage of a clear path. So what we're looking for is that tiebreaker. We're looking for an area inside of favorable large triggers to take a trade from, which means that inside of this area right here, we're looking for fibs, a midband, or yellow one-to-ones. Are you with me, Chris? Are you with me, Michael? These are how the great lessons come to be. So here's my trigger lines, and check it out. That's my only line. That's my only one of these, and it's outside of them. All right, so Michael, this is not a high probability trend trade. This was one of the trades that tends to get people. I don't have momentum, but I do have a clear path on the large chart, which means if I have the perfect entry area, I might choose to take a shot at this trade. But do you notice how this is my area right here? Whoops, let's make that a little less. But these are my trigger lines, and they're separated. The line is not inside of the triggers, therefore rule number 3 isn't met, which for me, it means that not only do I not have momentum, but I also don't have an entry area. And if I'm just relying on a clear path, this becomes a very low probability scenario. And look how it pushes even lower, and we just don't know where it's going to push with those weak triggers. And then the flip side of that, bum bum bum, is when we have odds favorable momentum, right? Everything says down. We have areas with the potential to break because of the momentum. I have the perfect entry area and no loss of momentum. Once again, medium probability, but I've got momentum in an entry area, and if I take that medium probability trade, it gives me the opportunity to get paid. And then when the path is totally clear, it just gets easier and easier. No audio. Guys, can you hear me? 10K. I wonder what's going on. I'll tell you what. I'm going to type this in here. I'm going to reboot real quick and see if that helps. So guys, sit tight for just a second. I'm going to leave the stage, come back and restart it. You may need to jump back in. I'm not sure if you will or not. If you do, I apologize, but I'm going to disconnect and come right back and see if we can get everybody included here. Now I just have to wait for people to get back in. Um, I hate doing that. Hey, Mike. Um, but if we're losing people, then what good is the education, right? So we're going to give them a second to come back in. Can you guys hear me right now, Michael, Sydney, Alan? Everything's good? Okay. So let's give it just a second. And I think it's important to make sure that people are good in here. And then, Michael, we went into the medium probability scenario, and that's what we were doing is we were just looking at charts and gauging advantages. We were just looking at what was happening in the moment and determining whether or not our three rules were met. And it turns out that they were not. So this is where you may choose to not take a trade. Gosh, I hate booting people out because everybody's like, oh my God, where'd they go if they weren't paying attention? So hopefully they come back in and they're good. Mr. Hunt 139. Long time no see. Hope you're doing well. Man, I hope people show back up. I hate booting like that. Just over and over. It just happens over and over. Man, I hope I didn't shoot myself in the foot with this one by restarting it. I got 10 of my 40 in here. Here we go. There's 11. We're going to give it just a second. While we give it a second, guys, for those of you that are in here, huge treat tomorrow. John Novak's going to be teaching the room. John Novak's going to take over, and he is going to just talk a lot about patterns that he trades every day. Give you a little glimpse, a little insight into what he does, um, which will be pretty cool for everybody, I think. And then, oh, we're up to 13. And then I'll be back on Monday to fix everything that he breaks. Ha ha ha. I kid. All right, up to 12. So, guys, we talked about the high probability trend trade. That's what we spent our first hour looking at. Talking about advantages, talking about looking for very specific things. Is the market coming from a good top or bottom? Was there a termination condition that created that full reversal? And if there was, starting the process of looking for that highest probability trend trade. Um, Making sure that you have odds favorable momentum, that advantage of momentum, making sure that there's nothing in the way, and then of course making sure that your areas are inside of those favorable large triggers for the highest advantage. Guys, I've never had anybody use this checklist, like follow it to the letter, and do worse than 70% ever. So I want you to keep that in mind if you're not hitting your daily goals, if you are not finding the consistency that you were really hoping for, this is a great way to step back and refocus. But it requires a lot of patience because the 90% feels more like 190% some days on whether or not these set up. But this is your foundation, being able to locate the entries. So I've also created the same checklist, but this one has a picture of that termination creating a full reversal. So visually you can put the two together. It talks about odds favorable momentum and it shows you exactly where you're going to pinpoint to look for your entry. And it reminds you that when the trigger lines aren't strong, the advantage goes away. Things can change a little bit. It talks about whether or not you have a termination condition or whether the path is clear. And it also introduces you to that idea of when areas do have the potential to break. And then it helps you refine that window of opportunity. And Chris, this is the one that might have kept you out of that long earlier, is because you didn't have areas inside of your favorable large triggers. And it's the areas inside of favorable large triggers that create the best bounce point. So this checklist is designed for you to look on your computer and to study for a few minutes in the morning before you start looking for those high probability trend trades. This checklist is designed for you to print it out, to put it on your desktop, to make sure that everything is good. Hey, 10KM, can you hear me now? And guys, I apologize and I appreciate you coming back to see me. I know that I kicked each and every one of you out of here and you're coming back in. But it's important that everybody gets the lessons. It's important that nobody gets left behind. Um, I'm gonna tell you right now, guys, this checklist, not only are you going to have it on your desktop, but this is what I want you writing on your charts. Every time you present a picture to me, I want you to go back to those written advantages. Write them on your chart. Write an arrow to them being met. The exact same way that we went through this together. Where we talked about what was happening on the chart. This was odds favorable, but this wasn't. We had a clear path with the arrow, and we didn't have the pullback to the area. So we're using the exact same language on the checklist to annotate our charts, to go back to create that recognition. Every time you take a picture, you should take a picture of your large chart because that leads the way. You should take a picture of your small chart by clicking and dragging, going from top to bottom. And the most important thing, especially as you really start to refine things, is make sure that you're showing me your entry. Make sure that you're showing me where you get in and where you get out. Because what this does is this creates opportunities for you to get better with your management, to get better at your entries, to get better at everything that you do. So it's these two charts together with the right amount of information that gives me the opportunity to give you the absolute best feedback. I gave you the checklists, right? You know how to annotate a chart. We're going to embrace the advantages. And now I'm going to give you a plan. And I like sharing this plan. This is the plan where there's two types of traders, guys. There's traders that have found success and then mysteriously lost it. And typically that happens when we get loose with our rules. Somebody in the room said yesterday, I typically start to lose when I get loose with my rules. And I think that we all do that. But this is a plan designed to keep you focused and optimize your chances of success on that high probability trend trade and also on that medium probability trend trade, that trade where an area has the potential to break. This is not the end of the road for you guys. This is not designed to be all that you ever do with the software because when you learn to read the software, you're going to be empowered to craft a plan tailored to your personal goals. And it's your chart reading that's going to get you to where you want to be. But this one is designed to optimize your chances until you get to that point. And it's going to be your simulation, your study, class feedback, and practice that gets you to the point to where you can have a plan that suits your needs, trades that feel good to you, trades that are easily recognizable to you. Um, so this plan focuses on your entry. First and foremost, this is the plan that has you into the market at the best of the spot. Oh, no worries, Chris. I hope you have a good time talking with them. If there's anything you need, let me know. Nice to have you in here. Your simple plan for consistency, guys. Never fight the large chart direction or triggers. Just don't do it. How easy is that? Define your entry point. Make sure that you're getting in at the absolute best spot. And make sure that you're getting in initially with odds favorable momentum, with no terminations, with an area for entry inside of favorable large triggers. Guys, this is your best of the best to get going, and it's very mechanical. There's not a lot of room for wiggle here, and it's designed that way to keep you focused on just feeling comfortable and confident. Well, once you get into the trade, eventually you're going to have to learn to manage it. So when you can identify the best entry, that also means you know where the market shouldn't go. So this very mechanical, methodical, pragmatic management plan has you in at the best spot. Your initial stop goes where the market shouldn't, and there's nothing for you to do at this point. You're either going to get stopped out, or it's gonna go in the direction of the trade. And I want you to remember that your first 20 days is designed to find this entry. Don't worry about what happens next. Make sure you're in at the right spot. If you get stopped out, that's cool. Go through, write your rules on the chart, make sure you had the advantages. It might have just been a cost of doing business, or it's gonna give you one of those reversal bars. In the reversal bar, means that the momentum is winning, that the clear path is winning, that your great entry is doing what you thought it was going to do. So you'll be able to reduce your risk just above that reversal bar. You're managing your risk before you ever manage your profit. But notice that it's if then. If I take the perfect entry and it gives me a reversal bar, then I'll move my stop. And then at this point, there's nothing to do. You still might get stopped out for a small loss. Guys, it happens. It's cool. Work through it. Or it's going to hit your first target. And if it hits your first target, well, that's $100. And the $100 feels good. If I walked up to you in the street and I said, hey, here's $100, you'd be like, yeah, that's awesome. So this creates a little bit of confidence, a little elation. You get that serotonin, that dopamine, right? It feels good to win. And then you're going to move your stop to break even. So not only did you win, but now you have nothing to lose. And that's amazing. Because when you have nothing to lose and you have money in your pocket, it makes it easier for you to hold for that second target. Because remember, we took our entry on a smaller, faster chart, and there's going to be fluctuations within these bars because it's a tiny little chart. But with money in the bank and nothing to lose, we're going to hold for the second target and we're not going to touch it. We're either going to get stopped out, break even, which is going to happen, or it's going to hit that second target. And if it hits that second target, guys, that's a $300 trade. That's a trade that puts $300 into your account. You don't have to worry about what happens next. And I want to tell you, the best of the best is a great plan because $300 a day is $1,500 a week. Guys, that's 6 grand a month. I missed my six. That's 72,000 a year. The idea is that you learn these entries, that you see the potential, and then you make the decision to study this, to practice this, to present in class, because I'm telling you right now, this happens all the time and it creates opportunities for you. But it starts with never fighting the large chart direction or triggers, defining your entry, and then learning how to manage that trade. Give me a solid couple weeks where this is all you focus on, where you're really just building that foundation to read your indicators. Keep it simple. And then I put in a plan to take those areas with the potential to break, that 50-50, and it revolves around momentum on both charts and making sure that you don't have divergence on that smaller chart, not forfeiting the advantage of momentum when the clear path isn't present, making sure that it is from one of those termination conditions. And guys, this is your best case scenario for taking those trades. And what you're going to find is a lot of people take these trades outside of the best case scenario and they lose more than they win. So stay focused on the best of the best. Stay focused on giving yourself the advantages. And what you're going to find is life doesn't have to be difficult. It doesn't have to be terribly difficult um, to take these trades. And I'm going to tell you as well, this plan right here, this KISS plan, the Keep It Simple plan, this is your go back. This is your fallback. This is your man. I'm trying to catch everything and I'm catching nothing. Go back to this one. Give it a couple days. Refocus. Get focused on advantages again. This is a great way to get your head right to get back into the game if you're finding challenges. Um, and guys, that's our first hour. This is what I talk about every day, is I talk about the high probability trend trade. We learn the trigger line and the Fibonacci rules for when it's okay to trade. This is our focus, just to get you guys that foundation. You guys need to simulate. Post your pictures in the room. Have a conversation with me about everything that you do and everything that you see, and tell me what you see. Because remember, we're becoming chart readers, and if you don't tell me why you did something, I have to assume that you guessed, right? But if you tell me, hey, Mark, I had this great look here, and it's not the best look, we can have a conversation. The idea is that we want you practicing the correct rules, not the wrong rules, because the wrong rules will win every now and then, but they don't win as often as they lose, which means there's no statistical advantage, which means you're really setting yourself up for long-term failure. We're going to simplify, focus on the high probability trend trade. Give yourself the advantage of building that foundation. Create confidence through the memory of success, and then maybe work on that medium probability trade. Go study it a little bit. But what looks are you going to commit to? What does it look like? Guys, this is where this spreadsheet that was given to you from Nexgen, which I'm dropping in the room right now. Your favorite looks is an entire section. Every time the rules are met, the advantages are present, you should be taking a picture and dropping it into your spreadsheet. Every time you guys, well, not every time anymore, but when you guys would post an amazing trade, whether it was medium probability or high probability, I would steal it. And on this spreadsheet that I just gave you, there's 270 pictures-ish of great entries. And not all of them are winners, but they're rules-based trades, they're clients trades. It's what you guys are doing with the software. Every great trade has a management opportunity. So as you develop your management plan, you're going to fill this section up in your favorite look section. Patterns that repeat themselves. You're going to start to see this, and it may be stuff that brings you success, but it also might be stuff that hurts you, right? It might be not having favorable large triggers, and you keep getting stopped out in these wonky looks. Eventually, you're going to go, whoa, I got to avoid the wonky looks. Or it may be the gap theory. It may be recognizing that when price reaches areas and the large triggers don't follow, you don't want to take a short there because all of these areas are likely to hold and it's likely to snap back. So you begin to recognize patterns through your study, put them in the room, go, Mark, is this a pattern? Is this something that happens a lot? We'll go back and search it and find it, but get it in there so that you recognize it. And then the Mark Novak section, the termination conditions section. Guys, this was my Achilles heel as a brand new trader, as I love to trade into areas that were likely to stop the market, which meant that if everything said down, even though the triggers didn't break, I was going short, right? And it doesn't work out. Look how the market bounces. And when there's indecisions in the triggers and stuff like that, it's problematic, guys. Um, and this is one of those, what was that, 839? I want you to see how this KISS plan is designed to keep you on the right side of things. Wow. Oh, that's 939. This is one of those 50-50 looks. This is an area with the potential to break. And I want you to see this because a lot of you guys love this trade. The smalls are through, the momentum is strong, but the large haven't cleared the area. There's not a clear path. Guys, give me a Y in the room if you're comfortable with this concept. This area has not broken. We know that it's a decision-making spot. So I want to annotate this chart and I want to kind of show you why the KISS method is what it is. With all of this momentum, guys, there's a shot that this is going to break. There really is. Everything says up, everything is strong. But what do we see on the small chart? We see a loss of momentum. That's what divergence means. So if I don't have a clear path, and let's annotate that. If I don't have a clear path because both triggers aren't on the other side. Let me make that so it's legible, right? But over here, I do have odds favorable momentum, and I want you to see how I resort everything back to advantages. Whoops, that's not what I wanted. And this, that's okay, Joel, it's the same one. This is a loss of momentum on the smaller, faster chart. That's what divergence means. There's actually two of them. So guys, if I go back to basics, if I go back to the rules, I have momentum on the large chart. I feel good about it. I don't have a clear path, which means it can't be high probability. And now on my smaller chart, where I thought I had odds favorable, it's showing me that the momentum is starting to go away. So honestly, I don't have the momentum or the clear path. I'm losing the advantage. And sure enough, the entry area doesn't save me. A second loss of momentum pushes it beyond. This is one of the most lost trades for new users because we're not relaying back to the advantages. And I want you to see the other side of that. Let me go to crude oil because we had one earlier today in crude oil. Right here. Let me scroll back to the 9 o'clock hour. Whoops, what did I do? Because this is both sides of the coin on a medium probability trade. I do have odds favorable momentum, and I do have the potential to clear, but I don't have a clear path. On my small chart, I have no divergence. And I have that perfect low risk entry area. So where I gave up a clear path, I still have momentum and entry area. Guys, this is your 50-50 trade as a new user. And if you were in at 84, you had over $200 profit potential. which means on a 2 lot, $300. And then divergence prints, weak triggers. What a great exit condition. No reason to ever lose this trade, guys. Um, but do you see the difference between the two? This one only sacrifices the clear path. The other two are intact. And then the first one that we looked at not only sacrificed the clear path, but it also sacrificed momentum. And I'm telling you right now, guys, this class is designed to give you confidence through the memory of success. That's your 50-50 trade, guys. That's your second trade. This is designed to make you respect those advantages a little bit, to give you the best chance of success. So I want you guys to take this KISS plan, and if you're not where you want to be right now, embrace it. Give me 5 days on it. That's my challenge to you. Can you stick to this for 5 days without breaking your rules? If you can, I feel like you're going to be exactly where you want to be. There's odds favorable momentum directly into fibs. Guys, this isn't your trade because it's a termination condition. But the momentum did win. You have to be okay with not taking that trade. Are there any questions about the high probability trend trade? Is there anything that I can clear up for you a little bit? I know it's a little overwhelming for some of you guys, but what did we do this morning? First, we talked about trend. We took the first bite of that elephant that is day trading. We talked about trend, being able to understand whether we should be looking for long trades or short trades. And guys, that is simple. That's number one. Most of you get that down in like an eighth of a second. Once you have established the trend, you're making sure that there's strong triggers in the direction of that trend. This is rule number one. Guys, if you don't have number one, there's no reason to go to two as a new user. There's just no reason. But if you do have strong triggers, you've coupled it with the trend, now we're going to look for rule number two, and we're going to make sure that the path is clear. And this is where you have to make a decision. Am I willing to trade into areas that may stop the market, or do I want to wait for a clear path? The right thing to do for new users is to wait for that clear path. So we're piecing these together, right? We're looking at our chart and saying we do have trend. We're looking at the chart, we're saying that we do have momentum. We're looking at our chart and we're saying we do have a clear path. And then you're going to refine it down to that entry area. Then you're going to look at that smaller, faster chart and pick that point inside of favorable large triggers for your entry. The market appears to move fast to new users, guys, which is why we keep this sequential, which is why we keep it really focused in the beginning on simplicity. And then we talked about the tails. When you have strong triggers, when everything says up, rules 1 and 2 are met, guys, scroll back on your chart and circle those tails. And if they line up with an area inside of favorable large triggers, whether it is support or resistance, long or short, doesn't matter. The rules are the same. This is creating recognition. When you see it in a market that isn't moving, it's easier to catch it in a market that is. This is how I want you to study. I want you to open up your large chart. And I want you to go back and just even get that ellipse, right? And circle a tail and go, okay, I did have momentum. Whoops, but I didn't have a termination, or I did have a termination condition. No matter what happens next, because this is what it looks like live, I'm not taking that trade, and that's just not an opportunity. And then you scroll back, and you're looking for odds favorable. There's odds favorable with the potential to break. We already determined that the first tail was a rules-based trade. The second tail was not. And we scroll back more, and we're just looking for the best of the best. There's that odds favorable. There's that clear path. I wonder what this looked like on a smaller, faster chart. And that was at 4:05 in the morning. But let's take a look. I'm making it so I can super go. But guys, do you see how I'm studying and I'm looking for the best opportunities? And great googly moogly, look at that entry on the pullback to an area inside of favorable large triggers. This is how you develop trust, guys. Scroll back, circle your tails, write your rules, and let's talk about whether or not it was an opportunity. Does that make sense to everybody? This is your study tool. You've got 10 days going back. This is all we're doing. If you say, oh, there were no rules-based trades, can't you go back on the day and make that determination through just a little bit of study? Bum, bum, bum. Where is my tail? There it is. Right at support inside of favorable large triggers. Do you see it again? Guys, we're only one day back. You can take 10 days to go back and do this. I'm doing it right now. We're just trying to, at this point, I'm just kind of nailing it home. That one didn't make it. Been circling your tail for years. That one didn't make it. That might not be your trade. Because when you go back and you write the rules, I did have odds favorable. I did have a clear path, but it didn't pull back to resistance inside of favorable large triggers. You're not going to count this as an opportunity yet. But as you grow with the software, you might. So, Michael, are you comfortable with this? Can you go back and circle these tails and just kind of look for the rules to be met? Because you can do it not only on crude oil, you can do it on the NASDAQ, you can do it on the S&P. Guys, this is you proving that I am full of crap. This is you saying Nexgen is full of beans. There's no way that this is possible. I'm going to go back and circle tails and prove them wrong. Please go through that effort, because what's going to happen is you're going to be stuck with me forever. Forever. That's what I'm looking for, guys. I'm looking for you guys to put the work in, because if you put the work in, you're going to realize that it works. You just have to learn to work it. And then once you put the work in and you do realize it works, you've got to fight the temptation to be smarter than the plan until you've got a plan written for yourself that wins more than it loses. I've been doing this a while, guys. I know what your process is going to be. So commit to it, look at it, embrace it. I'm going to take a break. I'm going to go run a lap and stretch my legs and see if I can touch my toes, breathe through my eyelids and all the things that relax me. And then when I come back, we're going to look at the pictures that you guys have posted. This is the second half of class, guys, is you posting in the room, whether it's a trade, whether it's a question, whether it's a chart read. And when you post in the room, I'm going to give you feedback. We're going to talk about these advantages. Everything that you do, we are going to commit together, hand in hand, side by side, walking through the valley of trading, making sure that you're doing it in the best possible way. And that's really what we do every day, guys. We lay down a foundation and then we talk about how to execute. We talk about your execution. So I'm going to take a break. And then when I come back, we're going to start looking at your charts and we're going to answer your questions. So if you have a question, don't be shy. Go change your login name if you're shy, right? Michael becomes Susie. We'll never suspect that it's you. Travel the world becomes stay in one place. We'll never suspect that it's you, but get your questions into the room. I'll be back in about 3 or 4 minutes. If I were a new student, Joel, the most important question that I would ask is everything that was on my mind. Every question that I had would be the most important because I'm going to pay good money for this software. I'm buying a tool. I got to learn how to use it. And if I sit on my hands and ask nothing, then I'm robbing myself of that great opportunity. So every question is the most important question. So if you have 30, you have 30 most important questions that you need to be asking. Otherwise, you're doing yourself a disservice. It's like having a coach and never asking for help, and nobody gets better like that. I'll be back in a few minutes, guys. Type it now, Joe. Hey Chuck, what is the stock symbol for your company? Question mark. I'm gonna have my brother build a chart. Okay, guys, I am back. Whoops, I didn't mute the YouTube. You guys are gonna hear me eat a muffin on YouTube. So let's take a look. No momentum, and it blasts right through. Did anybody go short, hoping that a clear path and weak triggers was enough to make it go down? If you did, you broke a rule, medium probability, right? Odds favorable momentum, not a clear path. Yep, Michael, I see it. Tell me what it means. Do you know how to type on your charts yet? I love the picture, man. But do you know how to type on your charts yet? Because that's going to be the key to us having a conversation. Let me show you. I'm going to pull it up. We'll do it together, and I'll use your picture. The picture itself is perfect, right? You're showing me both charts. You're showing me, um, you know that there's something going on here that you dig, and there's something going on here. So do this. Right at the top, Michael, there's an arrow. So where you put this circle, I want you to tell me what's happening. I want you to tell me, is there odds favorable momentum? Is there a clear path? Just let me know where you circled it, right? And then over here, was there an area inside favorable triggers? And what's going to happen is if you do this every time, right? If you do this every time, you're going to be able to gauge. So here you're going to say, absolutely, there was odds favorable momentum. But there was a termination condition, right? So maybe this isn't one that I'm going to look for. Up here, it was weak triggers. And no areas inside, and you knew not. So what I'm looking for is I'm looking for you to tell me what your read is. And that way, if there's a challenge with it, man, we can kind of work through it together and get you exactly where you need to be so that we can get consistent 100%. And by we, I mean you. So that's what we're going to do. Thank you for posting that picture. And I'm telling you right now, it takes some guts to post in the room. It really does, especially if you're not sure what you're doing. It takes bravery to post in this room and to put yourself out there. I try to be super warm fuzzy, and I very much focus on celebrating victories. So don't be scared, guys. I'm going to scroll to the top of the chat box, and we're going to start looking at some of the stuff that you guys have posted today. Not a lot of pictures coming through the room today. Gary posted one this morning. Um, Gary has a bad bottom, pivot from space. So as he comes into the mid band, and those large triggers are a full bar away, you'll notice that Gary didn't take the trade. Solid work, Gary. Gave away the advantage of a clear path and chose not to take it. And then when everything does say up, you're able to get that entry, pull back. Looks like the same one that Alinsky took, the same one that I took. You get out at the one-to-ones. I had the same target too, but I talked myself out of it. Alinsky took the exact same entry. Made some money. Gotta love it. I took the exact same entry. Gary, I think you and I had the same exit on that first contract too, but when I got divergence right there from those one-to-ones, the second I exited, and I wish that I hadn't. That was poor management on my part because the large chart was screaming to the upside and the large chart won. And then who was this? This was Gary again. Divergence Prince, you took your exit as well. And then I think from down here it ended up going. So outstanding trading, Gary. Great job with the NASDAQ there. And then GWC, termination condition, good top. And then you're trading directly into a termination condition. The small triggers are breaking through. No divergence. Perfect entry. Out at the trouble spot. Solid work, GWC. Odds favorable. Smalls are through. Large are not. No divergence. Perfect entry. Bang, bang, boom. GWC gets paid. Your Ninja Trader won't connect? Sometimes when that happens, there's a problem going on. Are you on Tradeovate or Rhythmic? Rhythmic. Hey, Elvis. It may be with them, guys. I'm not sure. Unfortunately, sometimes there's challenges, so I can't diagnose it from my seat. Great trade, GWC. All right, Cavs, so let's go in and take a look at what you did. Same one, odds favorable, and then Cav, you get in on the way down rather than on the way up. Totally cool. It's a data issue. Sorry, guys. I'm sorry that you're going through that. I'm glad it's not a next-gen issue. Um, Makes me happy. No worries. Oh, you did post with the explanation? You're awesome. Let me go find it. Um, I think this was your next one. You took the trade on the pullback to the large, 13.2, small trigger to 13.2. Yep, so you had it, like everything was good, right? Cav, perfect 50-50 trade. Dun, dun, dun. So let's talk about managing a 50-50 trade. Why is that not opening up for me? There we go. Um, there's your perfect entry, right? Just solid. You're in a little low. Um, Elvis, because he's a professional day trader and running a company. Um, you got to understand, John's job isn't to sit there and answer questions in traders chat. His job's to run the company. He's working with programmers today. He's also doing his own personal trading. He's managing his sales people, and working on some other exciting things, maybe preparing for tomorrow's class. There's days where he's super available, and there's days where he's just got to go play boss man. And today's probably one of those boss man days. So, Cav, that's your perfect 50-50, brother. You're welcome, Elvis. Always nice to see you in here. And then this right here is the 50-50 with divergence, which isn't the best look, right? And it looks like, let's talk about where the market shouldn't go. And this is where you kind of have to make that commitment. From here, you knew that the market should go there, right? Yeah, typically one of us is available. I'm the guy that doesn't have all the answers, though. So, Cav, your stop goes outside of the window of opportunity, right? And then if this one pulls back, that's kind of where it's likely to go. So if you're going to have a stop placement, this is where you have to make a decision. I'm either going to leave it where the market shouldn't go, beyond the window of opportunity, or the other side of that coin is I'm just going to get paid at the trouble spot, and if I get another entry, maybe I go again. Does that make sense, Cav? The first entry is the best trade. The second entry is still a really good trade. But this is where management becomes kind of a you not only have to read what's happening, where you're at, where your risk is, but you've got to make those decisions. If it does pull up, your stop was right in the path, right? So if it does pull up, your stop's going to get run over on the way to the most likely to bounce area. And this happens a lot. It happens so much that I think no exits where entry should be. It's right there in the spreadsheet. Look at that stop inside of favorable large triggers right at support with a high probability trend trade. So you're not alone, Cav. And when the market's really moving, sometimes it's tough to make those decisions on the fly. So this is where repetition comes in. But that's what I would do is I would go back and re-annotate your chart yourself and say, don't put a stop before the bounce point. Either commit or take the money and wait for the re-entry. Does that? So great picture, dude. Awesome trade. Awesome trade. And because that's divergence on a 50-50, you'll know it right here about that third bar, which means you still got 7 or 8 ticks on that second contract. And then GWC could have been a second entry, absolutely. Because of the great top, because of the odds favorable, because it's only one divergence, you could have taken that second entry down to the second. Um, it's just a matter of heading the game, I suppose. It's hard though. It's hard to exit a trade because you exit because you're like, man, it's time to exit. Um, and then to convince yourself 3 bars later that it's time to get back in, that's not always easy, and that's going to come with experience. That's going to come with more reps in the market, getting you where you need to be for sure. And Gary, let's see what you got. Gary, everything says down and you haven't quite reached that fib. Oh, you took a momentum style. Very nice. Get paid on it. And then once again, guys, this is the second time that we're seeing it. There is a stop directly at the bounce point if this trend trade is going to work. Does that make sense, Gary? Great trade, but that stop is right at a potential entry, isn't it? Cav, do you see that as well? I'm telling you, it's super common, guys. And you never realize you're doing it as a brand new user. But when you go back and you take a deep breath and you're just like, oh man, I did that. I shouldn't have done that. And it happens. I love it when it happens, though, because every time you make a mistake, every time there's something that can be done better, guys, you get better. Because we tend to remember the challenges that we have. And then GWC, absolutely. So you do have a term, and you do have, so GWC, this is one of those ones. Let's talk about a couple different things. There is essentially a full bar back to the large triggers. Um, and I like that you didn't take this one, right? But when we get back to the large triggers, there's no areas to create a bounce. So it becomes kind of tough. We're trading into, it's a 50-50. Now there's divergence. And I just don't have an area to create a ricochet over here. Does that make sense? This is why when I teach the basics, I talk very much about having an area to take the trade from. Um, so even if the midband is a gap theory going into play, it still closed the distance. And that's exactly what it did, is it closed the distance. But there's no area for it to bounce off of. And since there's no area for it to bounce off of, you're just not sure. Is it going to go up to resistance? Is it going to hit your high volume area? And your range chart is telling you that 1-to-1's held. Yeah, I think everybody's having challenges right now, 10K. There was a couple of people talking about it, and I believe Elvis was nice enough to throw this in the room for us. Let me make that bigger for you. We are aware of the issue, rhythmic and erratic action. We're working with our rhythmic to correct the issue, and as always, make sure to take care of our traders the best we can. Please attempt to flatten your accounts in our trader. We will provide an update once we have more to share. Please refrain from sending tickets. We'll be fixing all accounts impacted by it once resolved by the end of the day. There you go. Elvis, thank you for sharing that. I don't know if Elvis is still in here, but he wanted to make sure that you guys knew. So GWC, does that make sense? You've got the right pullback. Um, it just, there's nothing to trade off of. And I think that creates, and this is one of those ones, if you wait for a reversal bar, it still kind of pulls up to the top of those triggers. Um, you can do whatever you want, but where does your stop have to go? Where shouldn't the market go? Does that make sense? It shouldn't go, I don't know. I don't have any areas for it to bounce. So I guess you could say it shouldn't go above the large triggers. If it does, I don't want the trade anymore. Um, but your mid band's down here, your fibs are down here. Your range chart gave you a reversal bar and a breakout bar and a high volume area, and everything is above the fib. So not only is it a 50-50 with divergence, you also don't have rule number 3. I don't know that this is my trade. It can be your trade. That's okay. I love the termination condition, but I think there's an awful lot of problems below it when you get in, and there's not a super clear low risk entry to make me feel good about what my risk needs to be if I try the mid band, if I try the 1-to-1s, if I try the large trigger, if I try the synthetic trigger, right? I hope that makes sense. It's the right idea based off of the good top, but that's kind of where the advantage ran out. And then Cav. Awesome. Was that you, Cav? Hold on. I'm not sure whose picture that was. 1 second. Is that 2 pictures that you posted, Cav? Or just one huge picture? Hold on. Goodness gracious. That's a monster. Whew. You tried the long at 10:15. I'm trying to line it up. So you tried the long before the momentum, before anything rolled, and it didn't work out for you. Just tried to jump on in. That's a tough one. And then when everything rolls, you take a little stab back with the momentum, and you're able to take advantage of it a little bit as it goes up. On that 50-50 that didn't work, you took kind of the apology trade going up. But do you see how that first one's directly into a fib? All the triggers are below it. The smalls are below the large. You are fighting both trend and momentum, and you kind of got exactly what we would expect. I think the key is eliminating these, right? Stop losing money on these, and it makes these trades pay a little better. Let's see where we are in the wonderful world of pictures. Cav Sydney. Sydney loves the momentum trade. Hit one target, stopped on the other. You were in at 77, so you took one up here. I love this one. Everything says up. And they got you on a pullback, Sydney. Awesome, chef. Did you take it as a trend trade going up when they came back for you? And I think that the momentum trades are great if you remember to exit with the loss of momentum and then just go straight into trend trade mode. Nice job, Sydney. Trend, momentum, clear path. What a recipe. Gary, pull back to the mid band at support inside of large triggers and it didn't get filled. Rats. Happens sometimes. You did get filled over here to resistance though. Nice. And then it pulls back and goes all the way to the target. Solid trading, Gary. What's the problem you're working through? Just curious. And is it working? And Gary, this is not a pivot stop out. This is a pivot with divergence. That's it. Not a pivot stop out. In order for this to be a pivot stop out, okay, trying to be first. So Gary, in order for this to be a pivot stop out, price creates the divergence. It would have to pull back and test it with the triggers above and then go. Pivot stop outs here. Yeah, this was you. You labeled it pivot stop out. This is just a loss of momentum. This is a bad bottom. In order for it to be a pivot stop out, it would have to come and stop out the pivot, but it never did. It just kind of ran. Because a pivot stop out's a termination condition. A pivot with divergence means that 50-50 trades are less likely to work. Nicely done. Dwight, let's see what you're doing. My entry was bad, period. That's that no momentum, right? Everything else is pretty. Dwight, everything else was sexy as all get out. The momentum wasn't there, so it was medium probability at best, right? You don't think so? All the triggers were below, so you had a clear path. Would you agree? You had a perfect area inside of favorable large triggers. Rules 2 and 3 are 32 flavors of awesome. Rule number 1 wasn't present. You did not have odds favorable momentum. That's the only thing working against you on this trade, Dwight. And I'm not going to lie. It's a fantastic look. Termination, and then a lower divergence, and then all the triggers break, and tiny window of opportunity. Yeah. Oh, nope. Your entry was horrible. Sorry. I see it now. You tried to take a momentum trade without momentum. Oh, it goes full circle. If you had waited for the pullback, I could get on board with that one. But you tried to take a momentum trade without momentum, didn't you, Dwight? It's right there in the name. It's like ordering, guys, I want a cheeseburger without cheese. Well, damn it, it's not a cheeseburger. It's a hamburger, right? Can I get a chicken sandwich but with beef? Can I get a momentum trade? Hold the momentum. I love that it's in the name. And this is pretty common. It really is. It's a pretty common thing, which is why I'm poking fun at it, guys, because we've all done it. Because we see that look on the small chart and we're like, oh, here we go. And we're like, son of a gun. There's no momentum for that one. We've all done it. Don't ever feel bad about making a mistake. Don't ever feel bad for taking a trade and thinking that it was right and then looking at it after the fact and going, oh man, I'm not going to do that next time because next time I'm going to think about it. All right, so let's think about it. Strong bottom, everything says up. All right, so Alinsky, let's talk about your entry. And I'm going to go back to the picture that I posted. Did you see the pictures that I posted in the room for you earlier today? You may like this. Bum, bum, bum. So this morning, isn't this real similar? Like this is my area, right? That's my close above. There's just no way I'm good with that amount of risk, especially look how far away your large triggers are, right? All right, let me take a picture of your picture. This represents where your stop has to go, below the reversal bar. Would you agree? And that is 15. Your close was at 24. So that's 180 per contract. That's a lot, isn't it? Look at the distance. That's 180 per contract on a 50-50 with split triggers. Oh, is it starting to come into play a little bit? Kinda. So let's back it up. Is this area broken? Absolutely not. It's not broken. What else do you see? This area is not broken as well. Large triggers haven't gotten above it. Your large triggers are also a full bar away. Your large chart says if you enter on the small chart, you're hoping, my friend, right? And then you also got a divergence prior to your entry. And because it's not a full bar away, if you wait for the close above, look at the distance between your close above and the area you're expecting the bounce from. That's a huge amount of risk. And then sure enough, it pulls back a little bit more, but it still never even comes close. This is split triggers, right? That's a 50-50 split triggers, multiple divergences. This is such a, man, I'm afraid that it's going to go without me moment. And then check it out. Once it pushes back and tries to close the gap and your small triggers roll, there's an opportunity. And then there's, I like this opportunity to get back up. And I think that this is a lot like the one that I had this morning, where I had to say to myself, it's just too far away. I don't want to put that much risk on it, right? And then I was just patient. And look at where the close on the correct side. This is my area. And if I run a bar, look at how the close on the correct side is right there in line with the area that I anticipate to hold. But that little bit of patience gives me the opportunity to not have that huge amount of risk. And I got slipped on the way in on this one. Does that make sense? Right there. Whoops. I tried to enter right here, but I screwed up. I was going to put my stop in there, and the market spiked, so I had to quickly hit sell or buy market. So I'm in at 78.25 instead of 78 or 76. Cost me a couple ticks. Yeah, so it comes down, hits the mid band. Large triggers are so far away. I'm not willing to take that close. They act as resistance. And then I get on the right side. And look at how it lines up. I might have taken this one too. I probably would have been stopped out of this one. But see how that lines up with the area? And that's just a small chart read, Alinsky. Your large chart was pretty ugly. Your large chart was 50-50 on two areas with the gap theory back to the large triggers. Um, Not only was the mid band behaving as a termination condition, the fib below it. Yeah, but look at the gap. Where's your reversal bar marker? And this has you in at 21. This has you in all the way up here. So honestly, These don't line up very well. Oh, you went back in time to take. Let's see what it all looked like at the same time and see if there's something that we can look at there. Can you take that picture for me? But I hope that little lesson made sense. NASDAQ's a different animal, guys. Alex G, everything says go, so you went and you got paid. Alex G, it has been an absolute joy watching your trading lately. Odds favorable, didn't reach the area, pull back to resistance. Money, money, who cares what happens next? Um, what was the timestamp on your trade, Alan? Help me out with this. I'm going to go to NASDAQ real quick. Because what I don't have is a picture of everything. That was around 1017. So that was this one right here. But your entry was up here around 2122. Right? 1013. 951. This is 953 though on the NASDAQ. So your entries are, hold on. All right, here we go. This is where your entry is. So I'm just going to circle it. Where does it line up on my large chart? Cool. Well, I'm going back from the timestamps on the entry. 9:53:12. So that's this right here is what we're looking at. Does that make sense, Alan? This was your entry right here. And my synthetics don't seem to be printing, but I had resistance at 23, which means that I should have had a fib right here. Did you have the fib there? Let me look. I can't yet. You had one at 25. No. But let's break apart the small chart. I like the look down here, right? I love the bottom, stuff like that. Even without this fib here, look at this, look at the gap between the triggers. That's a huge gap. And you'll notice at the first pullback, I guess you do have odds favorable from a good bottom. It's just that gap. They tried to close it. I had two divergences going in. Did you have, so you already had two divergences coming in? All right. With two divergences and a gap, I'm just trying to see how we can make it better for you. If you want to line it up and talk about everything that you saw, um, I had a fib that you didn't, though. And then Joel, they caught you napping, huh? That happens sometimes. And then Michael, everything says down, short entry. You're damn right it is, Michael. But you notice what you didn't write on there? Michael, you didn't write odds favorable momentum. You didn't remind yourself that that should set the tone, right? You didn't write clear path. and you didn't write area inside a favorable. And what this does for you is it makes this easier to catch because you're reminding yourself why you did it. Because the reality is Michael, is you could have wrote short trade there. But if you wrote these rules, you know that it's not, right? And you could have wrote short trade here, short entry. The entry is just the final part, but the advantages are what get you to the entry. So I know I sound like a nag when I do this, but I've been teaching people long enough that I know that if you start writing the rules on the chart, you begin to embrace them. You begin to believe in them. You really begin to say, man, because of this momentum and a clear path, there's no way that I'm going to miss a pullback to an area inside of favorable large triggers. So outstanding. I mean, everything is outstanding. This is me nitpicking to try and get you a little advantage of consistency. But beautiful trade, Michael. Beautiful trade. And then Sydney, you get in with all that clear and you exit at the trouble. Very nice. Cav, it cracks me up that you have all this gray. Is this two different charts or two different monitors, Cav? I don't know what look below what. Beautiful momentum style. Oh, okay. Oh, same ones below? Right on. Beautiful momentum style. Odds favorable, clear path. You let it clear. That is freaking outstanding, Cav. I just think it's funny, all the gray, because I used to do the same thing and I have absolutely no idea why I did it. Um, but I would always do that. If you looked at my charts, they always look like this. And I don't know why. I don't know what it did for me. And now I do them like this. I would also do this. True story. If I was in a long trade, I'd pull my chart all the way down here to give it room to run. Does anyone else do that? Make your charts how you want them. Make them how you want them. I just think it's neat that we all kind of have that same little thought every now and then. People are people. Alan, beautiful. I love the emotion meter. Confidence. Odds favorable, clear path, perfect entry, money, money. Oh, and Apex got you. Alan, that's some rock star trading. The emotion meter, I love that. It has a big bearing on whether or not you're following your rules, right? I've had the fear on there, and it's usually because I'm breaking my rules. I like seeing stuff like that, where you guys really kind of police yourself. And then Finch jumping in with the gang, right? You missed the order, you chased it a little bit, but you knew where it was going with all that momentum. Solid trading, Finch. You still pulled something out of a missed entry. That's heads up, right? Still positive. That's good. Man, it's better to get out if you can't manage it, isn't it? You know what I have found though? Oh, nicely done, Ron. One of the things that I've found is that when I'm taking the right trades, even if NinjaTrader crashes, I couldn't care less. I took a long trade yesterday. I kid you not. It was dancing in the area, but everything said that it was likely to go to the next. I went and took a shower. I was like, my stop's in place. I know where it's going. My only regret is that when it got to my target, it was going so fast. I might have gone to the next area. And then Ron, boom, boom, goal met. Let's get the hell out of Dodge and get to the beach. Nicely done, Ron. Guys, look at it. Odds favorable, clear path. You don't have to hit a home run. That is four contracts, 32 to 36, $200 each, $800. Wouldn't it be cool to just do that once a day? I stink at math. What's $800 times 5 days a week times 4 weeks a month? That's not a bad month. 16,000. I'm a huge fan of base hits, guys. I'm a huge fan of getting in and out of the market before there's any challenges present. And Ron, and guys, you don't know this. Ron's a great teacher because one of the things that I've added to my trading, where's it at? I sent Ron a picture earlier. Is a little Ron style momentum. I've drank the Kool-Aid, guys. You're a great teacher, Ron. Because you annotate your charts with what you see. And when you annotate your charts with what you see, I know what your plan is. 50-50 with divergence, no trade. Solid, Joel. Way to be in the moment. Gap theory. Amen. Joel. Chart reading with the best of them. And then Cav. Oh, I think this was the earlier one, Cav. Yeah, the ropes fit. That was the earlier one. I love it though. That's clean. That's a clean picture for me too. Thank you. I love this trade. Just getting in on the way up. But you kept your head in it. And then being willing to get paid at one and let the other run. Really strong trading. And then Alinsky. So this is, okay, this is all of it. It's not quite the gap theory, and it does have the split triggers. I love how, so first shot's right here, right? And you took it, and I guess my only critique is just something that I've incorporated into my trading. If the close above the triggers is so far away from the area that I'm trading from, for me, I'm not willing to put that much risk on a trade. Um, and then the second one, I know why you did what you did for sure. You're like, oh, we're good. But then for me, with the large trigger so far below, that's that split trigger look. And we talk about favorable all the time. And I do it. Have you seen this picture, Olinsky? When those triggers are split, it can go down and hit that second one, which makes the risk even greater coming into this. And they try to get there, and they do on the large chart, right? Once it makes contact with that large trigger, oh man. Do you focus on the gap though, back to it? It's a strong bottom. It's a beautiful strong bottom. But if you focus on that gap back to it and look and see where it lines up, that's just, I don't know. I'm just talking about patterns. I'm not talking about rules right now. But one of the things that you'll notice, and let's go to a large chart and just see if we can see it a lot, is dun, 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 that's the gap theory, pulling it up. And I want to see it off of bottoms, right? Pulls back and hits the trigger. And of course, it's not going to give a lot of great examples, is it? Just wanted to see if it's a phenomenon. I'm just kind of thinking about it. But it's one of the things that I look for off a good top or bottom. I look for that pullback to the large triggers a lot, especially if it's not perfect. And there's really not a lot of examples going on. There's your gap theory. But if the trade isn't perfect, if it's not 100%, like if it's not my best of the best, and in this case with the split triggers, I'll pay attention to where the large are. And that's just something that I do. I don't think I even have a rule for it. It's one of those chart reads that kind of comes into play when I'm doing it. So maybe when you're taking entries on split triggers, go back and study them and see if maybe there's something to that that helps you out. Ah, and that was my last picture, guys. We made it through all of your stuff. Nicely done. So where are we at? This is NASDAQ. Not a good top, straight to support. Large triggers a full bar away, which means we're not taking the short. Look how it closes the gap. There's that gap theory. No reason to go short. It's more likely to finish the move up that way. But you got to wait for everything to roll. This market has just been grinding. And guys, there hasn't been an entry. which makes it frustrating. This one had odds favorable momentum. Let's circle a tail. That was your first one. And that one went from 40 to 58 before divergence started pushing it down. I would say there's an opportunity to make some money there. Would you guys agree? And then what about this one? That one's a little tougher. That one might not have gotten you. And then what about this one with a clear path, but not the best momentum? Think maybe there was an opportunity there? Potentially? And then I think this is the one that Alex showed us earlier. A couple of you guys showed us. Odds favorable, absolutely nothing in the way, picture perfect, and it continues down. So there's been opportunities. Beautiful, perfect. Ooh, and Alex getting a little tricky off the bottom there, huh? Little momentum style. I dig it. Termination, smalls get above the large, snap back to the small strong. That's a beautiful trade. You want to see my favorite thing though? This is the distance from like 10:25 to 11 a.m. If you're a high probability trend trader, that's 35 minutes in between trades. What you do when there's nothing to do is going to define how much money is left in your account from taking the best trades. It really is. Doing nothing when there's nothing to do, guys, it's not easy, but it sure is advantageous. Odds favorable. If you took the first one, you got paid. If you took the second one with weak triggers, you never really got an opportunity. That was enough to run you over. And now you're in a holding pattern. Catching it when it's perfect, when it's great. Notice here, strong triggers, one divergence. Here, weak triggers, pivot stop out. Your ability to read charts is going to help you define these moments, guys. This looks exactly like the NASDAQ this morning. Bad top, straight to support, gap theory pulls it up. All triggers agree, but we're not above that key area. I wonder if it's going to dance at this line in the sand. I don't know. We'll leave the NASDAQ up, guys. I'm going to go run a lap real quick. I can't sit in this chair any longer. I will be back in a moment, and when I come back, Joel, we'll start with you. Take 5, guys. All right, guys, let's get back into it. So Cav, all right, so here's the thing. You say when you have momentum in either direction on the large chart and the small chart, but the small triggers are inside of the large triggers. So it's what you're asking, Cav? Okay, let me look at it. All right, so Cav, that's momentum, right? Separation. That's not. So you're good with that, right? Which means that if I take my basic recipe, if a trade needs to be momentum, clear path at an entry area, I no longer have that one. So I know it's not high probability. So my thinking is if I still have the other two, it's medium probability. And you're exactly right. Which means, and this is the important part, whoops, I have to manage assertively. Does that make sense? So let's go back to the ES and let's see what it did. So I don't have momentum, right? And I really don't have a clear path either. My large triggers just got through. They hadn't gotten through here. So if I decided to take this trade with two divergences, so not only do I have not odds favorable, I also have it going away on the small chart as well. And I don't even have room for a pullback because I have weak triggers here as well. Can you take the trade, Cav? You can, especially if it's lower. It tends to push down further, right? Because now price couldn't reach the previous, and I've lost momentum twice. Man, this is an ugly look, and areas overrun all the time. Do you remember when I talked about if you're going to take a 50-50 trade, let those triggers smash through. Let those small triggers be aggressive and strong and rawr. This is where decisions happen. Sometimes it overruns a little bit. Notice how they got weak right at the key area. Notice how it lost momentum right at the key area. This is the look. This is a hope trade. Awesome. This is the damn it, I didn't get paid in the whole distance. And now I'm going to hope that they decide to go up from here. And every now and then it will. But Cav, that was a great read. Two divergences. The second is lower. Some would say that this reversal bar marker is a likely spot as a first stop. Great question, man. Great question. They make decisions at fibs. That's kind of the same look here, isn't it? Let's see what the small chart looked like here too. I love these. At 1017, small chart had divergence, same thing. Weak triggers. It had divergence. That's just a little overrun. Same thing up here, right? You're thinking, oh, here we go. That's not smashing through. And it's hard, especially if you didn't get paid in that stretch. So, Cav, that was an awesome question. And it was a great observation. And Ron, did you just take profits? Look at it. Look how it just, ugh. I love it. Guys, these are patterns. And once you begin to realize where the advantages go away, oops, excuse me one second. Sorry, I got held captive by a sneeze. That was your trade, Ron. Second divergence, lower, boom, straight to the reversal bar marker. That's the one you've been working on. Um, Cav, that was awesome, dude. Thank you. And then, Joel, you want to talk about management and the window of opportunity? Let's see if we can find an instance where there was a runner from the entry. And there's not always. Oh, I know where to look. Hold on. Let's go to crude oil and let's go to that 50/50. So let's talk management. Thanks, Joel. This is a good one. I'm going to scroll back and we're going to use this one as an example. And Joel, just for the sake of management, I'm only going to put triggers on here so that we can go through it. And we're going to go through it like the whole scenario. Cool? And then I'm going to put a fib down here at 25. And we're going to pretend like this is the only one off in the distance. And so let's go back. Dun, dun, dun. And guys, this is going to be a great lesson for you guys that want to hold for bigger moves. Engaging advantages. Whoops, I missed it. Hold on one second. 9 a.m. All right. What a great lesson. I love it. So the large chart says down. The large chart says odds favorable momentum. The large chart has a clear path. Is everybody good with that? It's saying look for a trade. We're going to go through the whole process, guys. So on the small chart, remember, I'm not worried about these because the large chart defines areas. I'm waiting for a reversal bar. And there it is. Michael, you're going to love this. This is a great one for newer users. Of course, you're already nailing your entries. My lowest point of resistance is a mid band. My highest point of resistance is this fib inside of favorable large triggers. So Joel, you're going to activate your limit order. Joel's like, I know where the market is likely to continue, and I'm going to put a limit order just below the mid band because that's the lowest point. And with this much momentum, I'm not expecting a huge bounce. So far, so good, Joel? Does that seem about right? Market pulls back. Boom. Not only did you get filled to the tick, Joel, let's do this just for the sake of the class. So we're waiting for it to hit our entry a couple ticks below. There we go. Hits our entry. So Joel, your initial stop is probably set into your ATM strategy. That's 83. You're probably right here at 95. That's 12 ticks. Oh, 85 is the highest point of resistance inside of favorable large triggers. 90 is the top of the triggers. I'm probably right here around 94. And I'm saying if it comes and gets like beyond this area, I probably don't want it. So far, so good. You're in the trade. Your risk is established. The advantages are present. Let's manage it. Market gives me a reversal bar. So now it's back on its way down, which means that my stop is 2 ticks above it. So this is my entry. This is my risk. And with all this momentum, this is where I'm expecting it to go. So far, so good. And the market comes up again and down again. And it keeps moving. And it gives me another reversal bar. Well, my stop is above the pivot, right? And I know that I'm holding for this move down. And I also know that this is a chart that fluctuates. This is a chart that's going to bounce up and down. There may be another trade, whatever. So Joel, yellow is your entry. If the market pulls back and gives me a high probability trend trade, where is it going to happen? Where should it continue from? Let's take our box. It's going to happen somewhere in here, right? This is the most likely spot for the market to continue down. So where shouldn't it go? It shouldn't go, I'm going to get rid of our initial entry. It shouldn't go 4 or 5 ticks beyond the window of opportunity. Make sense? So we're going to use pivots before we commit to a new stop. So you're either going to keep it above this one, or you're going to use the same idea for trend trades. And the market comes up and pushes back down. Now it's going in the direction of the trend, of the momentum, of everything going on. So now I move my stop 2 ticks above that. And I'm pretty much break even on the trade. So far, so good. We entered at the best spot, but because the large chart says hold, I don't want to chum the waters. I don't want to go, oh, I'm scared. I'm going to put my stop below resistance. Or, oh, I don't want to lose too much. I want to put it here. If you're committed to hold, you've got to be where the market shouldn't go. And then the market goes down, down. It does a little snapback, pullback, and heads back in. At this point, I'm probably behind this pivot right here. Odds favorable momentum is still in play. The market continues down. And it doesn't even give me another pivot until it smacks in to support. So this is an opportunity to hold for bigger moves, right? This is very much on the mindset of putting stops where the market shouldn't go rather than where you hope it doesn't go. And you're going to use pivots on the way down to manage your risk. Did that help out a little bit, Joel? And then what's the flip side of that one? Is if I entered at the area inside of favorable large triggers, right there on the pullback to, what's the price there? 83. $100 is 73. $200 is 63. The second line represents my exit. So I exited with $300 profit right here because I took the best entry. So then you ask yourself, guys, this is the best thing about what we do. I'm out of the trade. I'm flat. I don't have anything going on. What if the market gives me a pullback to resistance inside of favorable large triggers? Are we getting back in because the rules are met? And when we do, that's about 75, which means at 65 I make $100. And then at 55 I make $100. So between 56 and 83, I just made $600 rules-based trading, right? But you've got to get good at the looks to be able to do it. So that was 2 different approaches. Joel, there's the buy and hold. Or there's the guys, let's double dip when the rules are met. Let's get in, let's get out, let's get paid, let's re-enter. The challenge is if you get out at 300 and you never get the pullback, you may never get that second 300. But I don't think anybody with $300 in their wallet got pissed off about it. John Novak says, here's my trend trade. I don't have a termination that creates a full reversal, and I do have odds favorable momentum, but my large triggers are all the way down here. So what's the problem there, Alinsky? Is it could go down here. It chose not to, but look at your large chart. There's that pattern we were talking about. Look at that. When those large triggers are coming up, do you see how it tapped it? It's a beautiful trade. And John, your stop was lower out of the way. And Alinsky, you wait for the close on the right side. And that kind of signifies, hey, maybe we're not going to make it. It does tap it. Rockstar, brother. And John, your initial stop was down here, and then once you got the reversal bar, you managed below it. And then Alinsky, let's go to management. Where's your first trouble spot? Right there, right? Look at the momentum. Look at everything screaming up. Dude, get that pink line. Put a little extra jingle in the kitty. Nicely done, man. And then Cav got in on a pullback into the large synthetic mid-band 12 tick stop and lost this trade. Did you have odds favorable momentum, Cav? I didn't notice it on the chart. I know. We all have, Alan. Did you have odds favorable momentum? Let's go through the rules. You told me you got in on a pullback, but you didn't tell me why you got into a pullback. Were the small below the large? Were they wide? Were they angled in the direction of the trend? I say yes. That's rule number one, right? Did we have a clear path? The large triggers aren't a full bar away. I'm not worried about the mid band. Would you agree that rule number two is met? I feel very comfortable saying, Cav, great job. And then, Cav, did you have an area inside of favorable large triggers? Not quite. It's below. No bounce points in the triggers. But can we play horseshoes and hand grenades on this one? That's so close. They're working together. I'm gonna say rule three is 90%, right? You're close enough that, Cav, that's a great look across the board, isn't it? I love it. Everything is screaming down. There's nothing in your way. No divergence. Perfect pullback. Everything is beautiful. The real question is, did it piss you off when you lost? Did you think something was wrong? Were you mad about it? Were you like, this is some crap? It's just one of those trades that didn't work. And Cav, this is why I'm such a huge fan of writing the rules on the chart. Because, guys, I can't tell you this loud enough. When you write this on the chart and it doesn't work, you're like, oh, I had every advantage. And the challenge is, and Cav, I know that you've got a little experience, is Michael, when you do this, or Chris, when you do this, if you get in the habit of writing these advantages on the chart, what it does is it reminds you that every now and then there's going to be a cost of doing business. There's going to be some jerk with deep pockets that pushes it a little bit beyond where it's supposed to go. Cav, this is an amazing trade. I like everything about it. I would have lost this one with you. And I would have been okay about it because anything that wins 70 to 80% of the time has to do this 20 to 30% of the time. It's just, it is what it is. Absolutely, dude. Great trade. 50-50 trade. That's divergence. If you took it with one, they gave you a heads up that you needed to get out. That's crude oil, guys. Crude oil's putting on a freaking clinic today. And now it's a 50-50. Small's above, large or not. Everything's strong. Tiny window of opportunity. If you get a pullback, you have to make a decision. Finch, you took a chance. That's the same trade, isn't it? I was talking with someone the other day when it's a little iffy. And when I say a little iffy, I mean maybe there's not an area inside of favorable large triggers. You have a good idea of where it's going just based on everything, right? So, Finch, you knew that this pullback to the large triggers was probably your best entry. Guys, is there any harm when your rules aren't perfect? Look at the reversal bar. Gives you a little bit of, all right, well, at least now it's going the right direction. Because, Finch, how many times have you been in this trade where it just kept railing up on that exact same look? And you don't have any bounce point. This is where, and this was the conversation I'm having with somebody. That's where I'm a big fan. It's okay to use a reversal bar for entry. I don't have an area for entry, right? Finch, same look. At 11:01, exact same look. And it rails up, right? Never gets a reversal bar. I'm not saying that this is a rule, but I'm saying that's a pretty solid safeguard. At least force the market to go in the direction you want it to go. And then when this pivot stop out with no triggers through makes everything red, I know a lot of people that love to get short right. Well, it's back here, huh? There's your pivot stop out. There's a divergence. There's a pivot stop out. There's another divergence. Everything rolls, faces the right way, and down it goes. Kind of cool. I like the way you did it. And I'm not saying that you did it wrong, and I'm only mentioning the reversal bar because it's a conversation that I was having with somebody not too long ago. Um, and I think that when it's a little iffy, um, if it's a little iffy, for example, and this is the NASDAQ and those small triggers are up, but it's not the best look. I don't have the best momentum, right? Maybe I say, give me a reversal bar. I've got divergence, the triggers are flat. Maybe I say give me a reversal bar, especially with the small triggers above the reversal bar marker, and let's see what it does. So far, I'm not getting run over. Isn't that awesome? You know what direction you want it to go. And rather than hoping at the areas, you can say, you know what? Give me a reversal bar. See how those small triggers are acting as support? Alinsky, that's for you, bud. And we'll see what it does. We can come back and see it. And there we go. That's the one you took, isn't it? Or is that a different market doing it? Mid-band. Ah, look at that. That was your trade. And then you get odds favorable and nothing in the way and wild freaking horses. Couldn't keep me from looking for that one. Great lessons. Great lessons today. And then Joel, waiting on a reversal bar. Just waiting for your rules to be met. Just waiting. Come on, reversal bar. Give me some love. And Joel, do you notice how your entry is below the areas inside of favorable large triggers rather than just above the areas inside of favorable large triggers? What happens if it bounces off the midband and runs without you? Tick or two above. Tick. Oh, never got to close below, Alan. Never did. Did it keep you safe? NASDAQ traders, was that enough to keep you out of that one? I am like your guardian freaking angel, guys. My whole goal is to keep you out of trouble. My whole goal is to keep you from getting out of trouble or getting into trouble. Man, I love this look. Tick or two above my mid band, right there inside of favorable large triggers. I've got two divergences, but that large chart says up. That large chart says clear path. I got a fib at 64. Should we see what it does? It's so close. Is it going to run without me? I don't know. I'm going to sit and wait, guys. Does everybody understand the analysis that just went into this? Large chart said it was an uptrend. Large chart has odds favorable momentum. When I got the reversal bar on the small chart, my job is to find my highest point of support and my lowest point of support inside of favorable large triggers. And the reality is, guys, this is where I expect this market to bounce, if it's going to bounce, which means that if I get filled, my stop's going right here. This is about a 10 tick challenge for me. And I have every advantage that I look for, right? No divergence. It's a momentum trade. Nice execution, Jose. Beautiful. I was wondering if somebody was going to take that. You took it perfectly. Oh, look at that, guys. We're in. Oops, I don't have stops and targets. I'm waiting for a reversal bar in the direction of my trend. Where's $100? 41, 51. It's just a one lot. That's it, guys. This is what I wait for. I've got two. These two are from over here. So I've got two on the move. There was one over here. But it's a key area, isn't it? So where shouldn't it go? It shouldn't go below these large triggers. That's worth 6 ticks to me. With this look on the large chart, two divergences. There we go. There's your $100. And then there's that fib we were talking about. Sorry, I didn't have an ATM strategy, so it was only one contract. But look where the momentum took you. I didn't need an 8 range, did I, Joel? Odds favorable, clear path, pull back to the area inside of favorable large triggers. That's it. And then, Alan, I was putting it where it shouldn't go, right? And then, Jose, John has been watching you and took your momentum style trade. Beautiful, guys. Nice work. And then, John, you were out at 60-50. Half of them out at that problem. Other half to go to the fib. You know what, John? I like what you did today. You can teach my class tomorrow. Alex G. Momentum style. Perfect exit. I love it, Alex. Momentum style. Perfect exit. Oh my goodness gracious. So guys, for Christmas, I'm going to tell you what I want. Outstanding work, guys. Outstanding work. Not a high probability trend trade. This is a momentum trade utilizing momentum in areas. And then Cav. Rock star, brother. Doesn't have to be difficult, does it? Doesn't have to be difficult. 45 to 60. That's $300. Just keep participating. That's all you got to do. Look at that. Target hit. I hate that I didn't have an ATM strategy so that we could have held for the second target. Michael, how you doing, brother? There's John's trade. He took half of them off here. I wonder if he re-entered. Maybe not. Cav, thanks. And then there we go. Got your account at break-even range? I like it. Simulator account, right, Michael? Taking the lessons, learning them. And then the cool thing is once you start getting good at it, once you really start being comfortable with what you're looking for, looking at patterns and all that good stuff, um, guys, you can go to something like Apex, which is going to put you up to the test. They're going to let you test your plan. They're going to say, hey, I know that you're doing great on simulator. I know that everything's working out for you. Life is good. Why don't you go ahead and give us $18 and we'll put you to the test? And when we put you to the test, if you make 3 grand before you lose 2,500 on this $50,000 account, we're gonna let you trade live for us, and we're gonna let you keep 90% of everything that you make, and you can withdraw twice a month. And guys, the days of having to spend 10 grand of your own money are gone. Um, Nexgen gives you all the tools that you need to beat the system on this one, without a doubt. It gives you consistency, it gives you focus. The most challenging thing that you'll ever do is absolutely nothing when there's just nothing to do. And it gets all of us sometimes. Boredom is a killer. But guys, for $18, $34 a month, you can control $50,000 of their money, OPM, other people's money. And they've got bigger accounts, but if you can't do it on 50, why spend more for 300, right? So that's your next step is starting off with consistency, learning the rules for when it's okay to trade, simulating until you're always taking the right trades, um, understanding the looks so that you can be consistent, so that you can take those trades when they set up, and then go use some market replay. Joel, whose picture I'm clicking on right now, was the king of market replay. Joel, outstanding trade. Outstanding trade. Joel would bring me market replay pictures every day. Hey, Mark, I went through and I replayed the day and I fixed my mistakes, and I skipped the trades I shouldn't take and I took the trades that I should have taken, and I'm working on my management. And I'll be darned, Joel's posting trades like this in the class all day long. You can double your reps, guys. So what should take you a month, you can do in 2 weeks. Just go back and do it. Take pictures of the trades and bring them to my classroom and put me to work. Um, my brother keeps sending me little notes. I'm going to fire you. I'm going to fire you. If they don't start posting in the room, I'm going to fire you. And man, guys, come on. I'm just kidding. He wouldn't really, because he'd have to contend with my wife, and she's mean. And then, guys, repeat this process every day until you're always taking the correct trades. And that's when you go to one of those Apex accounts. That's where you go to Top Step or whatever, and you really practice, right? You practice. You see, has everybody heard the thing? Everybody's got a plan until you get hit. Everybody's got a plan until the pressure's on. Going live is the first time for pressure, guys, and you're gonna feel it, and you're gonna make mistakes, and you're gonna falter, and that's okay. That's where you keep coming back to class. You can ask John anything you want, Joel. And then once you guarantee yourself you can win, that's when they say trade live money. But if you're guaranteeing yourself that you can win on one of these prop firms, you're going to trade their live money. And chances are you're going to get cocky and excited and blow it out, and then you're going to have to start over. But guys, it's a safe environment, and you don't have to give up the kids' college fund. But this is your path to becoming a confident trader ASAP, guys. Flood my room with pictures. Flood the room with pictures. Ask every question. Make sure that you're annotating those charts, and use your darn spreadsheet. Track everything that you do so you can go back and study it tomorrow. Everything you did today, guys, should be in a spreadsheet. When John Novak took this trade, and I'll tell you right now, he's got more pictures than anyone I know. He should take this trade, and he should copy that link, and he goes in, and he's going to drop it in there. Whoops, let's make it a hyperlink. And he's going to do this. He's going to call it like awesome long or something like that that makes him feel good about himself. And he's going to say it was a trend trade. And I felt, is cocky on here? Because that's a John Novak. No, we'll go confident. And I was coming from a termination condition, and I had rock star triggers. And my 5-1 was as strong as I've ever seen it. And my first target, I won. And my second target, I won. And this may say better management opportunity or whatever he wants to do, right? But he's got this in there. And then tomorrow morning, he's going to wake up and he is going to study what he did yesterday. And he's going to look at that trade and he's going to go, oh my gosh, look at these trigger lines. It's amazing. I'm not going to miss this. What worked? What didn't work? What was easy? Was it Alan, the confidence meter? What made you nervous? What kept you relaxed? I love that thing. But if you do this every morning, how could you not get better, right? If every morning you start your day saying, what kicked ass and took names for me, and what absolutely slaughtered me? How can you not get better every day? If every day you reach out for coaching by posting in the room, how could you not get better? Everybody has their own path and everybody takes their own time frame. But guys, I'm telling you right now, it's been proven. Thousands of clients are making money because they embrace the plan, because they use the coaching, because they stick to the plan. There's my soapbox. You just have to commit. Get in and commit. When I moved to Colorado in my 20s, guys, before I had ever snowboarded, I told myself that's my goal. I'm going to snowboard. And you know what I did? I bought a snowboard. Having never been on a mountain with a board strapped to my feet, and I bought boots and a jacket and pants, and I said to myself, it's not learning isn't an option now. I'm committed. I've got skin in the game. And I'm telling you, sometimes you have to do that. Wishy-washy efforts get wishy-washy results. I did at the top of that mountain. I swore a little bit because it's terrifying in the beginning because you don't know what you're doing. And I like telling the story. So the first time I went to, and I was in Loveland, Colorado, and this was my first time on a snowboard. And my buddy, who's an asshole, takes me up to the top of a blue run, which is a little more difficult for somebody that's never snowboarded. And I'm sitting at the top of what looks like an 89 degree, 89 degree, just crazy hill. And I'm sitting at the top and I'm buckling and I'm getting ready to go and I'm absolutely terrified. And it must have taken me 2 hours to get down the side of that mountain. And I failed 1,000 times and wiped out. By the end of the season, by the end of the season, I was getting off the lift at the top of the same slope, and I kid you not, I was 50 yards down the hill before my second buckle was ever done. Because repetition and confidence comes from doing the same thing over and over. So don't expect to be cranking down the Olympic blacks on day one, guys. Give yourself a little bit of grace. Allow yourself to be new. It's an important part of what we do. And then Jose, yeah, John just got you right there in your whatchamacallit. Oh, sorry, Dwight. Thank you for that. Um, Go new in the upper left-hand corner, go to account performance and put your dates in. Yeah, and Jason is a rock star. Let me find you. Sorry about that, Dwight. Thank you for reminding me. Guys, I never miss your stuff intentionally. And there it is. Same one everyone took, right? No areas to bounce off of. But everybody was convinced that it would. I like your management. I like that you didn't give it up. Oh, Ron, I can't wait. Everything gets delivered tomorrow. We got keys yesterday, though, so my wife is there right now. Um, and I get to teach you guys and not put up all the little stuff. Spend a ridiculous amount of money because we have nothing. No plates, no silverware, nothing. Um, so I'm on a huge shopping spree. Dwight, everything looks good except you don't have an area to trade off of at all, right? No area for a bounce. And I think that we saw this trade from everybody, right? You waited for the large triggers, which I love, but what's going to make it bounce off those large triggers? Nothing. So don't sit and hope. I love that you got paid on it, but no areas for a bounce. That's the point that I want to make on this one, guys. There's nothing to bounce off of, and that's a challenge. So great job not sitting and hoping. Nicely done. So that was a little winner, right? And then that's the same one that we just looked at. That was a winner. And then Dwight, you've posted a couple other in the room, right? Today? And then that was a small loser. You're going to hate this, Dwight. So I want you to see something. Here you took the loser and you're down 330, right? And then you got 1325, 1.5, 3 points, 3.5. So that's 150 bucks right there. So that should have you at negative 150. And was there one more? I feel like maybe you're not showing me because if you were down 350 here and you're still down 300 after making 150, what did I miss? Is there a trade missing in there somewhere? It seems like you should be up or down only 150. Just curious. Just two trades today? My math may suck. I look at this stuff, guys, and I'm not saying that you're doing it, Dwight, but a lot of times people will hide stuff from me because they don't want to show a loser in the room. But I'm telling you, that's where the lessons come in. Oh, you only made 75? Okay. Two contracts. I may be reading that wrong. Yeah, I totally read that wrong. That's my bad. That was a couple ticks. That wasn't a point and a half. That was my bad math. Cool. But I look at this stuff just so you guys know because I love losers. I love you guys showing me your losers. And sure enough, without an area to bounce, and then no, the rule is we trade from areas because they give it a place to ricochet. They give it something to bounce off of. Areas make all the difference in the world. So Um, good stuff. Good stuff. Good stuff. Guys, that's it for me. Thank you for being here. You have the unbelievable treat of John Novak tomorrow. Put him through the ringer, guys. He's going to take all these basic lessons and he's going to show you some smart stuff to go with it. Um, but he's going to start with the same things we talk about. He's going to talk about advantages, and then he's going to help you guys create opportunities beyond it. And I don't know if you saw it in the other room, but he's going to start offering at least trial run where he's going to do small batch live sessions, 5 days, 3 hours a day, where it's just you, him, and maybe three or four other people going through, and it's like just crazy awesome getting you as much of his 27 years of experience as he can shoehorn into that time. So I'm excited about it, guys. I'm excited about the direction. I'm going to go set up all my utilities, and I'm going to do all those things you have to do when you move into a new